Well, Penny, it's nice to see you again. Gosh, the last time I saw you was at our Americas conference, I believe.
Is it really that long ago?
It's,
That's surprising.
and now we're all working virtually. Well, time flies. You lead the international practice for KPMG in Canada.
Right.
What's going on today?
Well, like you and the rest of the world, businesses and people are locked down because of the COVID-19 impact. I would say that, for our clients, safety of employees is obviously their biggest concern, and the employees are required to work from home. They are or potentially on sick leave, and we are starting to see more layoffs. The Canadian government has responded with some measures, more focused on those that are the most vulnerable in our society, including removing wait times for employment insurance and providing certain support payments for individuals who have lost their income. For employers, there's been some temporary wage subsidies that have been introduced that are quite generous, and the mechanism for qualifying for those has been changing, including some announcements that were made yesterday. In terms of corporations, the major form of relief, not dissimilar to a lot of other countries, including the US, is to allow businesses to defer making tax payments and tax filings. So those are probably the things that impact our clients the most, aside from the employee issues. Our clients are concerned about cash flow, business continuity, and many of our clients are anticipating losses for this year. So it is welcome relief not have to make your corporate tax installments with the uncertainty of not knowing whether you're going to be in a loss position at the end of the year. And then, of course, all the implications of trying to recover taxes on a more expedited basis. Given the complexity of the international tax rules, obviously that impacts how we move cash across jurisdictions. And I think it's important, Rodney, that we don't forget about all those OECD BEPS initiatives that are still going on in the background. The Multilateral Instrument that came into effect at the beginning of this year does impact how we move cash and the withholding costs of doing that. Certainly in Canada, there hasn't been a lot of guidance from the tax authorities on certain provisions of the MLI and how they should be interpreted. And I saw that yesterday the UK moved ahead with introducing or implementing their digital services tax. So, we had a very changing tax environment even before COVID-19, and some of those changes seem to be conflict with the certainty that's needed in this challenging environment. Of course, there's also all the corporate tax concerns that arise because of limitations on travel that create PE risks, or permanent establishment risks, where employees are working in jurisdictions the business might not otherwise be carried on. And corporate residency is also critical in Canada. Certainly, we saw the relief in Australia and also recently in the UK in respect of employees that are working in different jurisdictions, but to date we haven't seen any similar relief in Canada. Ultimately, our approach with clients is to listen to them, understand what their most pressing needs are. Our world has changed because of COVID-19, and the longer term impacts will also need to be considered in the global tax environment. At the current time, though, it really is all about managing in a crisis.
So that's just a heck of a lot of stuff for our clients to deal with.
Yeah.
I'm sure you're working harder today than, I don't know, just a month ago with all the demands. But it's very nice to see that Canada's introducing some reliefs as well. So there's an opportunity for businesses to perhaps mitigate some of the negative impacts of what's going on today.
Absolutely, and it's constantly changing. I expect to still see more development, so and maybe more targeted at business as well.
Well, that's fascinating and fantastic. So Penny, thank you for your time, and let's all get through this healthy.
Yeah, you too. Thanks, Ronnie.